Hello everyone and welcome back to Forex Scope. It's great to have you here with us today. We're diving deep into the gold market right now, bringing you a focused analysis on the 15-minute and 1-minute timeframes. If you're looking for clear insights and potential trading opportunities, you're in the right place. Before we jump into the charts and uncover the potential price movements ahead, make sure you hit that subscribe button and turn on notifications so you don't miss out on any of our future analyses. Let's get started. The resistance zone is identified between the prices of approximately 4,141.874 and 4,140.29. This area exhibits a notable period of consolidation and indecision, indicated by multiple candlesticks struggling to decisively break above this price range. Specifically, the candles from timestamp 176-278, 2300 to 176-278, 3200 show a clear battleground where upward momentum was repeatedly met with selling pressure, forming significant upper wicks and failing to establish new highs. The highest price within this timeframe was 4,098.103 and the lowest was 4,084.078, highlighting the inability for the price to sustain any significant upward move. This suggests a psychological level where sellers become more aggressive, defending the territory and capping further price appreciation. The repeated attempts to breach this level without sustained success indicate a strong resistance that traders should monitor. The presence of several candles interacting within this narrow price band signifies a period of accumulation or distribution where supply and demand were in a tense equilibrium, eventually leading to a potential reversal or continuation of a downward trend if the resistance holds firm. The support zone is identified between the prices of approximately 4,134.334 and 4,133.217. This area displays a clear sideways accumulation pattern, where the price found a floor and consolidated for a period. The candlesticks between timestamp 176-286-5100 and 176-286-6000 show multiple instances of the price testing this lower boundary without a decisive breakdown. The significant lower wicks on some of these candles suggest that buyers stepped in to defend this price level, preventing further declines. The highest price in this range was 4,141.234 and the lowest was 4,133.835, indicating a struggle between buyers and sellers. This indicates a demand zone where buying interest is present, absorbing selling pressure. The prolonged interaction of price within this band suggests a strong pocket of support where traders might look for buying opportunities. The repeated testing and inability for the price to consistently fall below this level highlight its significance as a support. This area of consolidation can be interpreted as a potential base for future upward price movements if the demand remains strong and buyers can overcome the selling pressure from higher levels. This resistance zone was formed as the price tested the upper bound multiple times between 10:50 and 11:07. Specifically, the high price of 4,141.945 at 10:50 and the high price of 4,143.765 at 11:06 show a clear area where buying pressure was unable to push the price higher consistently. The period between 10:50 and 11:07, encompassing prices from 4,141.163 to 4,143.765, indicates a zone of significant selling pressure. The multiple rejections and the general consolidation in this price range suggest that sellers are defending this level. The presence of multiple candles with significant upper wicks within this range further confirms the resistance. The price movement shows a struggle to break above this level, leading to the formation of a strong resistance. The period between 11:05 and 11:07 saw a high of 4,143.765 and a low of 4,142.623, showcasing the struggle around this resistance level. The subsequent price action also failed to decisively break through this area, reinforcing its significance. This support zone emerged as the price repeatedly found buying interest and bounced off levels between 10:31 and 10:36, and again between 10:53 and 10:56, and even earlier, it was tested in the range of 10:31 to 10:36. For instance, the low price of 4,137.163 at 10:31 and the low price of 4,138.582 at 10:35 show a bottoming out effect. The price also found support around 4,136.799 at 10:34 and bounced back. Later, the period between 10:53 and 10:56 showed a low of 4,141.956 and a low of 4,142.231, indicating a floor being established. The subsequent price action, particularly the dips in the early morning, demonstrates resilience at these lower levels. The area between 4,135.087 and 4,136.799, with the lowest price of 4,135.087 recorded at 13:05, shows a significant demand zone where buyers stepped in to prevent further declines. The multiple touches and the subsequent upward movements from this area confirm its role as a strong support. The presence of candles with significant lower wicks in this range further reinforces the buying pressure. The precious metal gold is currently trading at 4,139.786. Observing the 15-minute and 1-minute chart data, we see a complex interplay of forces. The recent price action on the 1-minute chart shows a period of consolidation and slight upward movement after testing the support zone around 41.34 to 41.36. The Fibonacci levels, with the first price, 4,135.398, lower than the second, 4,143.268, indicate a potential bullish bias. However, the strong resistance identified on the 15-minute chart at 4,141.874 to 4,140.29, along with the upper Bollinger Band at 4,141.185, suggests that upward momentum may face challenges. The tick volume data, while not explicitly showing a surge, indicates a consistent level of trading activity. The price is likely to attempt to retest the immediate resistance zones. A break above 4,141.200 could lead to further upside towards 4,142.500, fueled by short covering or fresh buying interest. Conversely, failure to overcome the resistance at 4,140.500 will likely result in a pullback to retest the consolidation area around 4,139.900 and potentially lower towards 4,138.500 before any further directional move. The market sentiment appears cautious, with traders weighing the bullish signals against the overhead resistance. The interplay between the identified support and resistance levels, coupled with the Fibonacci retracement, suggests a choppy but potentially upward biased trading environment in the short term, with significant decisions likely to be made at the key resistance levels. Traders should watch for decisive breaks or rejections at these critical price points to confirm the next direction. The analysis suggests a zigzag pattern with initial upward movement followed by a potential consolidation or slight pullback before a more significant move.